Are you worried about your retirement or if your pension pot is enough? In this episode, we're going to explain how people put physical gold into their pensions legally, tax efficiently, and without relying on market performance. Welcome to the Bullion Advantage, the podcast giving you weekly insights into the economy, key global events, and markets whilst helping you protect and grow your wealth with physical gold. This episode could change how you see your retirement and how much of it you actually get to keep. Hi, I'm Jake from Direct Bullion, and today I'm joined by Harry, who has helped people protect millions of pounds worth of pensions with physical gold. Well, Harry, thanks so much for being with me today. Tell me, firstly, what's your favourite thing about gold?
Yeah, cheers for having me, Jake. I think for me, gold's all about the safety. Historically, I'm actually a property man, so I see a lot of similarities between gold and property. I like the fact it's out of the system. I feel we speak to obviously hundreds of people every day, all the time. I think people are so scared about what's happening in the world right now. So
rightly so.
Yeah, I mean, too right. I mean, if it's not the government crippling us with taxes, it's the banks questioning every payment we make and every move we do. I mean, I don't know. What about you, Jake? Are you seeing the same thing?
Yeah. Yes. One of the reasons I got into gold, all the same reasons. With this podcast being about pensions, how can you actually hold physical gold in your pension? Like, what gold do you need to add into it?
And do you know what, mate? It's a bit of a hidden secret. I think a lot of people think it's a bit more complicated than it is. I always say, well, look, the reason you don't know about this is because the banks don't want you to know because they can't leverage your money. The government don't want you to know because they can't tax it. So ultimately, unless you go looking for the information or listen to a podcast like this where you're going to get the info from. But yeah, a really simple process. If you've got your current pension, you can look to move it into a SIP, which is a self-administered personal pension. And in there, you can actually buy physical gold and hold that. So I don't know if you have a pension at the moment, Jake, but where you look, your current investments are, where your current assets are being held, it can get a little bit grey. So having physical gold could be a great option.
Yeah, I'm on a Nest pension, and I can honestly say I don't know where all of it is.
No.
And tying into that, I'm sure you speak to many people about this. Is there any particular frustrations that people have with their current pensions at the moment?
I think this is maybe a bit of naivety from me, mate, but I used to think, I don't know where my pension is. I don't know where it's stored. Like, is this something I was supposed to learn at school? Is this something I'm just supposed to know? And actually, speaking to people, no one knows. They might know the company, but no one knows where it's invested.
I don't even know.
No, how much it's worth. I mean, I was speaking to a chap yesterday. I think he said he made something like £45 last year in his pension.
Yeah, I mean, just looking at the stats here, the low-risk Nest pension, 1.8% a year. That is nowhere near inflation.
To give you an idea, Jake, gold has done 1.8% per day this week.
Yes.
It's done about 10% in the last week. I mean, it's ludicrous.
Yeah, I was speaking to Sean yesterday. He said one of the people he speaks to has made something like 140k in the last 3 years on their pension.
No, I mean, it's look, don't get me wrong. Gold's having a fantastic run, and
at the moment,
at the moment, and of course we hear the price of gold's high. Of course, but maybe going back to what I said about property. When was the last time property wasn't at an all-time high? The fact is, things are getting more and more expensive. Why does gold continue in such a good fashion, a popular fashion? Well, the fact is, it can't be leveraged. You are looking after yourself. You are taking it out the system. We can't go print more gold. So it's a finite material, right? And I think that's why people are turning to it.
Yeah. Why do you think so few people know that you can put gold in your pension?
Similar to
like you said earlier. Yeah.
I think it's the same as that. No one's giving them the information. Financial advisors, there's no money to make on it. Why are they going to recommend it? The bank want to leverage your money, so they don't want it out of their system. And the government, it's not in their interest either. There's no tax to be paying on it. Yeah. So, I mean, Rachel Reeves is coming for all of us. So if people can protect themselves with it, I think the interesting thing, mate, is people are looking either to move their current pension or buy physical gold and use it as a pension.
Yeah.
I think that's the two sides of it now.
And so let's go into the actual process of putting gold into your pension. Perhaps from the start, where you store it.
Yeah.
Just go through the process a little bit.
Yeah, it's really straightforward. I mean, gold in it itself is an unregulated product. So we have to work with FCA regulated pension providers. Okay. And there's a little bit more a bit more of a gateway through to doing pensions. The luxury for anyone who works with us is that's really my job though. These pension companies can be slow, it can be a bit of an arduous process.
Right.
So having someone who's actually on your side, getting it pushed through in a timely manner is important. So the very first portal call, we will send you over a couple of pension providers we work with, very transparent with all the fees, let you see who's the best fit for you. Some offer different benefits, some offer different strategies, so you can go through all of that. Once you've decided, we'll get you onboarded, a couple of documents to fill in. Once we've got all that basic info, brilliant, we can move on. We'll set you up a call with the chosen pension provider, the account managers that we work directly with at those pension companies, and then they'll go through the setup with that. This is when we kick in, make sure that the two pension companies are actually talking.
Got it.
Moved over. We've actually been able to do it pretty quick as of late. It's been about a 10 to 14 day turnaround, which,
Oh, wow.
yeah, for pensions is quick. I think, again, people's apprehension is this going to take forever? Oh, God, I don't even know where my pension's invested. How long is it going to take? But no, that's a good thing about it. Nice and quick. Once you've done that, we talk about what size bars you want to have in your pension. So
Because it has to be bars.
Yeah,
Correct.
yeah. So if you weren't buying in a pension, British gold coins are your most tax efficient. They're VAT and capital gains tax free, I think.
Of course.
James mentioned that on the last podcast,
Yes.
didn't he? But within pensions, you can only have bars. The luxury, though, they're VAT free anyway, and then because they're in a pension wrapper, there is no capital gains tax to be paying on them. We just talk about what bars you want, and the reason that's important, you can't chop it up, mate. So if you had a 12.5 kilo bar, for example, that's well over £1 million.
I was going to say, how much is that?
Yeah, huge amounts. That's the ones that people see in the movies, I imagine. So people want to talk about how often they're going to be drawing it down, how they're going to use the pension. Is it lump sums at a time? Is it more of a monthly income? And again, just having that conversation with us makes people realise, brilliant, this is what I want to do. This is how I want to draw it down. Fantastic. We get the gold into the pension, and then not only do you have the pension company keeping you updated, but you've also got us. So if you ever just want a quick update, Harry, how much is the pension at the moment? What's the price of gold doing? Is it a good time to top it up with some more? We can go through all that with you.
So I suppose double peace of mind if you do it.
Exactly that, mate. It isn't a convoluted process, and sometimes I think that catches people out. Well, what's the catch? Where's the next part? Nope.
Yeah.
You're buying physical gold, you're putting it in your pension, your money's not being invested into a stocks and shares ISA that's making, what was it you said for the next 1.8?
The low risk one, 1.8%.
Yeah, I mean, inflation's more than that. So
By a lot.
yeah, I mean, money is most certainly going backwards in that scenario.
Yeah. Exactly. And you touched on it a little bit there. I think we should clear up some of the big concerns. Are there any risks involved? What's your access to this pension and what costs are involved?
Yeah, of course. I mean, look, this is where people have to be realistic. Gold is a moving market. It goes up as well as it goes down. However, the safety of gold is why people are so attracted to it. If we look over the last 20 years, it's averaged out at 12.5%. So actually, for people who are a bit more conservative, I mean, fivefold what they're seeing in their Nest low risk one. Yeah. That's a good benefit. Gold does well in times of uncertainty. That's what it has always done. We've obviously got wars in Russia and Ukraine. We've got France on the cusp of a revolution. You've got America, which seems to be going either further right and further left.
The divide is growing.
The divide is massively growing. So although we can't predict the future, what that tends to mean, central banks buy more gold, they double down on their holdings. If they're protecting their money, what does that tell you? They're looking to get it, aren't they? So I think that's it.
Yeah. And speaking of the gold price going up or the global conflict, gold is, well, for all intents and purposes, skyrocketing at the moment. You know, we've had this week, I think, about £100 increase in the price. For people who are maybe a bit tentative now, why would you say now is the right time to buy gold?
Gold's definitely an armchair asset. It's something you want to buy, sit on. Hence, a pension is a fantastic way of looking at it. If you're in your mid-30s, mid-40s, well, actually any age, if you've got a pension, you know this is something you're looking to grow over the long term. There will be peaks, there will be troughs. That is the nature of a moving market.
Of course.
But again, going back to property and what we've said, don't miss it because you see it at an all-time high. All-time high, figuratively, yes, but relatively to other markets, this is why we're seeing it do so well. The stock market's tumbling, the bond market's moving nowhere, cash is no longer king. You want to be protecting it. by protecting it, you're also growing it. And that's the main thing we want to focus on. Look at that 20-year average, as we just said. 12.5% over the last 20 years. 17 positive years, 3 negative years. It just shows you the reliability of gold.
Yeah. And just going back to pensions, tell us a little bit about what you can do once you're 55 in terms of a gold pension, because I know a little bit, and you can withdraw a certain amount once you're 55. Just explain that a little bit.
Yeah, so it's funny actually. So one of the chaps I work with, he just turned 53, and they've upped the age already to 57. I mean, this is one of the common things that a lot of people are thinking with pensions.
Yeah, that comes in 2027, I think.
Yeah, that's right. So they're up in the age, and I think this is a lot of people's problems right now. They keep up in the age. Rachel Reeves keeps pushing it back. I think the taxes are, well, they're coming thick and fast, aren't they? Especially on the pension side of things. So for a lot of people, they want to know, actually, is it invested wisely? Is it growing? Is it safe? And for most people, what if they up it again? What if it goes to 60 on the next tranche?
Yeah.
If you're in your mid-20s and you're constantly paying into a pension pot, you want to know this, don't you?
Yeah.
I think this is, again, the luxury of gold, Jake, is that don't look at it as the here and now. We have this conversation a lot with people. Crypto might make you a millionaire overnight. It might also bankrupt you.
Yeah.
But what gold's going to do is stop you living on the streets. It's that real hardcore, okay, it doesn't move a hell of a lot. Well, it's doing very well. And
at the moment, yeah.
Yeah, I think that's it. I think people have to acknowledge actually where the market's moving. They say it's at an all-time high, as we've discussed a few times today, but actually all-time high relative to what? Everything's as expensive as we've said. So get involved, see it grow. More importantly, protect your wealth. I think that's the key here, is protect what you actually have. It's the best hedge against inflation. You can't print more gold, so go from there, right?
Yeah, exactly that.
But no, you could draw down a lump sum at that point, 25% of your pension. And again, I think a lot of people are starting to use that. They want the money out of the system. They want their money out of a pension. Yeah. Whether they then go buy more physical gold beyond that, that's something that they've considered. But yeah, you can draw down at that point.
Yeah. So in future episodes of the podcast, we'll be going a lot deeper into the budget, especially once it's been announced. There are these rumours about a stealth tax in the next budget, income tax threshold staying frozen. Give us your thoughts on that.
Yeah, I think, look, this is where Labour are not benefiting themselves in who they're... I think if you're the bottom 0.1%, there seems to be a safety net for you. If you're the top 0.1%, you seem to be leaving the country anyway. Yeah.
Well, yeah, a lot of them.
Yeah, I mean, we've got more millionaires leaving than any other country. But the 99.98% of us sitting in the middle, we seem to be the ones getting stepped on week after month after year. And actually, I think where they're being savvy with it and maybe pulling the wool over people's eyes is, all right, that money might say the same figure in your account, but where does it actually get you?
I think that's exactly it. You know, they're saying, oh, we're not going to raise income tax, but it's just going to stay the same and it's not going to keep up with inflation. So I think they're, like you said, they're really trying to pull the wool over our eyes, and they're saying all this stuff like we're not raising income tax, but it actually doesn't mean anything.
Means absolutely nothing. I know it's trivial, but I even say to someone, even the cost of a pint at the pub, mate. Look at it at the beginning of the year, look at the end of the year. Yeah, do you know what I mean, though? I mean, the value just keeps going up and up, but the money's not going any further. The pound's being devalued every day at the moment, and Labour are doing nothing to support industry growth, nothing to support growth in this country, and wonder why we're going backwards. I mean, it's crazy. I mean, this was a stat we saw, Jake. If you were to claim disability allowance, you'd be $2,000 off better a year than if you worked a minimum wage job 40 hours a week.
Yep. And they wonder why people aren't working.
Exactly. We're creating a generation of lazy people because actually the system's against them as well. Yeah. There is no incentive.
There's no benefit to it. No. Well, I think that was a really informative chat, Harry. I really appreciate you being with me today.
I appreciate it, mate. Hopefully come back on and keep you updated with some of the market in the future.
Yeah. We'll see you next week.
Brilliant, mate.
Thank you, mate.
Bye.
So what we've learned today is that whether you've got a personal pension, old workplace pots, or you already have a SIP or SAS in place, gold could be the smartest way to protect your retirement and gain peace of mind. And like I said, a massive thank you to Harry for being with me today. Please hit that subscribe button, like the podcast, and also share it with someone who's on the fence about gold. Also, head on over to directbullion.com And also leave your comments below with any questions you have, and we'll answer them in the next episode. In the next episode, we'll be talking about something super interesting, along with anything else that happens in the next week, so you're not going to want to miss it. Make sure, again, that you like, subscribe, ring that notification bell to stay up to date with all our future podcasts. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.